She got a thing for Chanel vintage that drop before she can speak English. Do you love me or love seeking attention? I mean, which one is it? You keep calling me a twin, but twins ain't this different. Mentally, I'm already on next year. That's some 2020 clear vision. You saying let you finish. I ain't trying to hear it. I'm off of spiritual lifting, but I don't fly spirit. I'm off of finding happiness, but down to die serious. All smiles, Kevin Durant trials. Had to blow it on a court, I must have blew a milli. I'm walking on all charges, that's my new Achilles. I know they love to rock the check, but who gonna do it?
All right, y'all, we are live on YouTube. Today is August the 26th, 2020. And we're going to talk about the two types of life insurance. Listen, there's nothing sexy about talking life insurance, but we're going to try to make the best of it, try to make it entertaining, try to add a little bit of sizzle. Got a little Drake going on in the background, a little Ross. Look at me, man. I'm chilling in the breeze, baby. See what I'm saying? Trying to make it a little inviting, man. Let's just imagine we are somewhere on an exotic vacation, man. Looks like Cancun. We're going to be talking about the two types of life insurance. So listen, if you have not already, please like, comment, and subscribe. Please hit the bell. Be notified every time I drop a video, regardless of the conversation. And if you know me, Burch the Messenger, I'm looking to just give you a conversation to inspire you to think differently about everything. Share information. We are trying to not fall victim to the scripture, Hosea 4:6, that says, "My people are destroyed for lack of knowledge." We're trying to not fall victim to that. All right. So we're going to go ahead and start this conversation. All right, y'all, let's get to it. So we are going to talk today about two types of life insurance. So if you've already caught my previous video, part one of what is life insurance and why do I need it, then you've already kind of familiarized yourself with the basics, at least, of what life insurance is, how it works. I want to talk today in this video about the two types of life insurance. So without further ado, let me go ahead and get to the screen and we can start this presentation. So let me move myself out of here too. I'm not trying to be seen right now. Okay, so let's talk about the two basic types of life insurance. And so when we're talking about the two basic types of life insurance, what we are talking about is how does a person, what options does a person have in order to be able to provide something that will basically be a problem solver in the event of an unexpected loss, okay? And so we're talking about the possibility of a breadwinner or someone else who is a partnership in that breadwinning. So two people in the household, one person may unexpectedly transition, pass away, die. What happens? Okay, so there's two basic types of life insurance that everyone should know about. So I'm going to go ahead and throw them up here. There's term life and there's permanent life. Now, term life is the life insurance that will expire. So those that life insurance, typically 15, 20, 30 years. There is the possibility, depending on the type of term life, the type of carrier, that you can turn that into a permanent life insurance policy, which is the other option, right? So permanent means it will never go away. It will always be there. So there's two types. Each serves a purpose. I believe in both. Now, what I am currently throwing rocks at, throwing stones at, is the life insurance policy that is being sold with respect to term that does nothing to assist a person when they're living. Again, now, what we've got to realize in 2020 is life insurance serves much more of a purpose than just to pay a death benefit. The reality is more people are outliving the term policies. Therefore, the payout on term policies is low. So what you want to have is a permanent life insurance policy, and one that you can use. Now, if you're going to use term, you need to have a living benefits policy. Okay, now we won't go into depth in this video. Just go and check out the living benefits video, right? What are living benefits? Go and educate yourself on that. So if you're going to have term life because it works for you, it is the most affordable, make sure it has living benefits. So again, go check that video out. All right, so term life and permanent life are the two types of insurance. So let's talk a little bit more about term life. It is guaranteed coverage for a set period of time. Again, it is ideal for those with short-term life insurance needs. What is a short-term life insurance need? Well, for young couples starting out, or young couple that has a mortgage, or a young couple that has a mortgage and a child or children, while you're working on increasing your income. In the meantime, you have a short-term need. If income was to be reduced because of an unexpected death, what would happen to the family? What would happen to the home? What happens to the lifestyle? That's a short-term life insurance need. So again, in that video, if you have not seen it, what is life insurance and why do I need it? We talked about the unexpected things. What are the things that can get in the way of your future goals? You know, dying too soon, illness, and living too long. Those are the things. So term life, again, it is guaranteed coverage for a set period of time. It's ideal for those that have short-term life insurance needs. So to cover a mortgage, or to make sure that college is paid for, or to give a spouse an opportunity to get themselves together without rushing. That's what that's for. Now, it does not accumulate cash value. This is important. When we're talking about accumulating cash, in some instances, there is a need for a person to do that. And so term life does not give you this option. However, I will talk about in permanent life, that option is available. So in permanent life, you'll be able to accumulate cash. All right, so doesn't accumulate cash, and for all intents and purposes, I mean, it's the frequently most affordable type of coverage, and it is due to the short-term coverage period. So again, 15, 20, 30 years, those are short-term coverage periods. So if you're someone who's in their 20s watching this video, in 30 years, you'll be in your 50s. Chances are you'll still be living. However, there's a possibility that you could have a critical illness or a critical injury. So therefore, a traditional term life insurance policy that does nothing for you while you're living, that's trash. That's trash. You need something that is going to provide you living benefits. But again, it is the most affordable type of coverage for short-term coverage period. And that works for you if you're in your 20s and you need to use it while you're living, that's there. All right, so let's talk about the permanent version. In other words, this will always be there. Now, here's the beauty of term life. Let me back up real quick. In a term life situation, all term life policies that I put in place have what is called conversion period. A conversion period means I have the ability, if I am the person that has term life, to then turn it into a permanent life insurance. There's no cost to do this. There's no needing to go and get another medical exam if you had to have one the first time. Man, it's the best. It's the best of both worlds. So let me tell you why. Permanent life insurance, unlike the term insurance, with permanent life, now a portion of your premium will go to building a cash value within your policy. Okay, so unlike term, you don't have the ability to do that. Let me bring the camera back to me full time here for just a moment as I go on this rant. So when you're talking about term, let's be very clear. Term life works like this. if I'm 20 years old, if I'm 30 years old, if I'm 40 years old, if I'm 50 years old, and I want to have, let's say, $200,000 or $300,000, the cost for that $300,000 living benefit policy is going to be so cheap in comparison to a permanent policy. Here's why. In a term policy, again, I'm only paying premiums just like I pay premiums to my car insurance. So just like Geico every single month, you pay a premium to have either liability or full coverage auto insurance. Why do you do that? Well, in most states, you've got to have at least liability if you want to drive a car. So once upon a time, so there are such things as no-fault states. So there's some states where people ride with no life insurance. But in most states, in order to have a car on the road registered, you've got to have at least liability. So you have liability, you pay it. Why? Well, if something happens, you're paying 40, 50, 60, 70, whatever your car insurance premium is, you're paying that. So if something happens, if life happens, guess what? You pay a deductible. Okay, that deductible might be $500, $1,000, whatever it is to your car insurance. They're in turn, they're going to take care of your car. They're going to make sure your car gets repaired like new, best as possible, or they're going to take care of third party, right? That's why the liability is there. So just like your premium in a living benefits policy term life, you're doing the same thing. You're paying it. But here's the thing. As long as you own your car, as long as you pay that premium, that will always be in place. In a term policy, you're going to have up to 15, 20, 30 years. And when those the period comes to the expiration date, if you have not made it permanent, it will expire. You'll then have nothing. Okay, so that's how that works. So you're paying a premium. So in the event life happens, critical illness, critical injury, in the term living benefits policies that I am referring to, not just, that trash, just a life policy, but a living benefits, you'll be able to use that 15, 20, 30 years in the event of a critical illness, critical injury. But there's a big one there, baby. It's juicy. That thing jiggles when it walks. There's no cash value being built in term policies. Okay, so that's the big difference here. So now in a permanent policy, here's what's happening. I'm going to get a living benefit side. I'm going to have a cash policy as well. So let's be very clear. In a permanent policy, yes, I'll have living benefits. However, I will not have the ability to get a larger benefit policy amount for such a cheap monthly premium. Okay, so you're not going to be able to get the same type of pay-in to get the same living benefit policy amount, right? So permanent, the goal with it is to accomplish two things: to have living benefits that I can use in the event of critical illness, critical injury, or transition to death. That's there, that goes to the beneficiary, but I'm also now gaining the ability to grow cash. So my living benefit policy can't be as large, because guess what? Now that premium is going towards building cash, right? Does that make sense? Man, let's feel the breeze. Man, that feels so good. All right. So hopefully this is making sense. Let's get back to the presentation. All right. All right. So, okay. So here's what we're doing. We're looking at building cash. We're also having a death benefit. This cash value that allows you to use it, not have to pay current income taxes on it. Okay, now I'm not going to go into that particular strategy in depth, but yes, it is that great. Okay, you don't have to pay current income taxes on the cash value within this life insurance policy. Okay, you'll be able to access it on a tax advantaged basis, perhaps in your later years for retirement purposes. You will be able to use it during your lifetime for, watch this, unplanned expenses or to meet short-term income needs. What are unplanned expenses? Well, unplanned expenses, the washing machine breaks, the refrigerator goes out, the air conditioning, the vehicle, right? These are unplanned expenses. And let's be very clear, in today's society, the statistics still are true. In the majority of households today, between 85 and 90% do not have $1,000 if there was a $1,000 need. Let that sink in for just a moment. 85 to 90% of households do not have $1,000 if there is a $1,000 need. So in an event you need cash, you don't have it, there is the ability to use for unplanned expenses this cash value. Okay, that's the beauty of it. Right now, your 401k, that's not a luxury. You don't have that luxury. It's not as readily available. And on top of that, there's penalties and you do have to claim it as cash. Now, again, not going to go in depth. This cash value can be used to supplement retirement income. This is so important, especially in the time where people are not planning for retirement, aren't even having the conversation. You've got to do something, right? So let's talk about the first type of permanent insurance in whole life. So whole life has been around. Your parents, parents, it was a popular thing. It was the first type of life insurance that gave those who wanted lifetime coverage. In other words, they wanted to be able to have that coverage and not go away, but they also wanted it with guaranteed fixed premiums that wouldn't go up. Some people have believe this, some people have premiums right now that will go up at some particular point. It might kick in after 10 years or whatever, but those premiums go from 35 now to 45. It's crazy how that works. But they wanted guaranteed fixed premiums. They wanted to have a guaranteed death benefit. So let's say, for example, they wanted to have a $100,000 guaranteed death benefit when that person passes away. That was guaranteed to be there in the whole life. They also wanted a policy that guaranteed to build cash value. So whole life was very popular because it told parents and grandparents, you can invest in your child and your grandchild, and when they become adults, they'll have this $30,000 whole life cash policy that they can use. Not so true. Not going to get into all of that, but not so true. Okay, not so true how that works. But there is some cash value there, but it's not really there when the person believes it's there or when they need it. All right, so let's keep that in mind, but we'll talk about that in another video. But whole life is, in fact, the first form of permanent life insurance, and it's whole life insurance that can offer all of these guarantees, right? It can offer these guarantees. It's going to always be there. That premium will always be fixed, and that cash value will be there. Now, let's talk about a little bit more robust, the type of life insurance that's permanent. It's a little bit stronger. It's a little bit more beefier. It's been lifting weights a little longer. It's a little bit more swole, right? And that's universal life. So universal life is where whole life takes the pivot. And in this permanent type of policy, it's considered to be the most flexible type of life insurance. All right. And it's more flexible because it gives you a premium flexibility. So let's say, for example, a person can pay, one day they're paying in $80, life happens, and now they can only afford to pay in $50. That's possible with this type. Now, remember, in whole life, it was a guaranteed premium. This is flexible, right? So this, you can play around with it should life happen. It has a death benefit that is flexible. So later on, if you have a need to increase, you can do that, okay? Now remember, in any video that you're watching, any policy that I'm talking about, my policies come with living benefits, okay? Let's keep that in mind. Cash value accumulation and accessibility come with universal life policies. So you'll be able to, again, accumulate cash and access it. And the total premium outlay may be lower than whole life insurance, but is dependent on the future interest rate credits. Now, that will make much more sense with respect to how you can grow cash in these universal life policies. But what's being said here is the total premium outlay may be lower than your whole life insurance. In other words, you may be paying less than the whole life insurance over time, but it is dependent on future interest rate credits based on how aggressive are you willing to be in the universal life with respect to cash growth. Now, again, in this video, we're not going to go in depth, so check out the video on what is universal life, or rather, what is indexed universal life, where we'll talk a little bit more about how you can grow cash, and you can grow cash with only upside potential, no downside risk. And that's facts. Okay. Now, in this, some of the most popular types of universal life are, as I've already mentioned, one. Well, I haven't mentioned this one. The fixed universal life is one. The other is the index universal life. It's my favorite, y'all. But these are the most popular types of universal life. And again, these came on the scene after whole life. Okay. And these are the types of policies that are permanent, that will give you the ability to grow cash, and cash that is accessible. All right. Now, we're going to talk about in the next video, what are living benefits and how can living benefits work for you. But for now, let me bring this video back and bring it to a close. So if you're wondering, again, you know, I feel the conversation, Jay. I watch your videos, you know, very informative. You know, it makes sense what you're saying. But if you're still not bought in, that's cool. Listen, I'm not trying to convince you to do anything other than just be a learned and just be a learning individual. Be an individual who's open to the conversation. Be an individual who says, okay, you know, even though my situation right now, none of this seems like it really makes sense or why I should need it. Think about the positioning in this game called life, because there is a positioning. And just like anything, right? If you've ever been a part of a ground floor opportunity, let's say for example, a business, you could get involved in a business ground floor opportunity. If you got involved when the business was young and you stuck with it, you were positioned for success. And that's all I'm trying to get you guys to think about with these particular types of strategies. If you're young, it makes sense to go ahead while you're young, while you're healthy, and grab living benefits now. From a term perspective, pay less for it. And right now, you might not even be thinking about retirement. It's a possibility. I highly suggest if you're young, start doing that now. And you absolutely, by the age of 50, 55, you could leverage that money and turn yourself into a financially independent individual, or have that money to do other things. But start that now. Don't wait. I know, you know, you only live once and you're enjoying life, and I get it. Listen, I've been there, done that. I Euro-stepped a lot of conversations, but the other part about that is it's a maturity thing. It's a maturity thing. With life, you grow. With life, you grow. Sometimes you got to get knocked down to actually, wow, woo, baby. So that's how it works. So I get it. If this conversation, you know, is not necessarily resonating with you, I get it. But don't be naive and don't think that this is not for you, because it's for everybody, right? So these are the two types. Check out the other videos. All right, check out the other videos, right? If you're just catching this video and you have not seen the other video, what is life insurance and why do I need it? Check that out. You know, what is indexed universal life? Check that out. Check out the other videos. Check out all the other videos here on the channel. My goal is to inspire you to just be a better version of yourself all the way around. So please, again, like, comment, and subscribe. hit the bell. You'll be notified. But I hope this information does something for you. Leave a comment down below. What did you like? Leave a comment down below. What did you learn? Right now, leave a comment down below. All right. Talk to y'all soon, man. The Messenger. I'm out. Peace.